Risk on took hold in early today Asia session. Over the weekend. Trump tariff threats on several NATO members due to the political tensions between US and Greenland. The S&P 500 and the Nasdaq 100 E-mini futures declined by close to 0.7% to 1% in today's early Asia session. The US dollar strength that was seen last Friday dissipated a slight bit in today's Asia session, and as well as gold and silver managed to stage a significant intraday rally due to the risk of scenario that is being played out on the global stock indices right now. Very good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. I hope that you guys have a great and restful weekend as we unfold in today's much more higher volatile session due to Trump renewed threats on the several EU nation over the tussle and control of Greenland. Before we kickstart the gist of the daily dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not a representative of future results. All right, so here we go. All right, let me just to make sure that everything's all right. All right, good. Okay, so let us kickstart what has taken shape over the weekend and as well as early today's Asia session. So over the weekend, like I mentioned at the start of the daily dose, was the highlight of the geopolitical tension between these three region, the US, NATO, and as well as Greenland, where we know that previously Trump has expressed interest of US taking over control of Greenland due to strategic reasons. So over here, Trump, for the very erratic movement, and he did this what I call it a sudden burst of anger, stating that he actually threatened to actually hit NATO members that side with Denmark over the tussle of US gaining control over Greenland. So he did mention that over the Sunday, he's looking to impose a 10% tariff on European countries supporting Denmark in his pursuit of Greenland. So that applies to key European countries with the France, Germany, and as well as including of UK. And we have Netherlands and Finland as well. And this 10% tariff is to likely take effect by the end of this month or early 1st of February. And if things doesn't work out well, according to Trump, he will sought to increase it to 25% in June unless the deal is reached for the purchase of Greenland. So there's about a hardball tactics saying that Trump, he is looking to buy Greenland at all costs, despite the fact that the trade deal that was actually being negotiated with EU nation last year. And last but not least, also his lieutenant, US Treasury Secretary Bissett, reiterated saying that a weak euro means Trump must take Greenland. So it seems to us that the administration has now started to pose a rather hardball tactics to EU, regardless of the trade deal that was being kind of agreed on in principle last year. So that could totally tear apart this trade deal narrative that was in place since the second half of the year. And right now, market participants has not started to price in. Would there be a continuation of tariff man coming back into the picture, creating much more volatile movement on the risk assets? So for sure, in a very short term, we now start to see this risk-off movement in the global stock indices with the E-mini futures, like I mentioned, the E-mini futures right now is the S&P 500 futures trading in the Asia session via Globex is down by negative 0.8%, and the higher beta heavy tech centric Nasdaq 100 E-mini futures is down by negative 1%, and that also created a negative feedback loop into the other Asia Pacific major stock indices, where the Nikkei 225 is down by almost negative 1% as we are speaking right now. showing a slight rebound at the start of today's in the last hour or so, but still down by almost negative 1%. The Hang Seng Index is down by negative 0.8% as we are speaking, and the rest of other Asia Pacific markets are also trading in the red intraday as we are speaking right now, 11:07 a.m. Singapore time, with the CSI 300 China A shares benchmark index down by negative 0.10%. The China A50, the much narrow index for the benchmark in one of the benchmark index for the Chinese A shares market, comprises only of the top 50 stocks, down by negative 0.3%. And if you go down the region, the Australia ASX 200 is also down by negative 0.5%, with the exception of Kospi, which is up by 1.2%, and our defensive STI Straits Times Index is even also in the red, down by negative 0.45% right now. So it's a much more of a risk-off environment. But very interestingly, this risk-off environment doesn't translate to a strong US dollar. So instead, the dollar was actually trading weaker in today's Asia session over here. What we could see is that based on the 5-day rolling, give me a minute now, based on the 5-day rolling performance, the dollar yen actually plunged down to negative 0.14% due to the risk of intervention, which I highlighted last week, where we start to see much more higher urgency between this government authorities, indicating their displeasure of the dollar yen rocketing to 159 psychological level last week. And also what's interesting over here is that given the fact that we now start to see this rising geopolitical tension between US and its former allies, or its current allies, which is the European Union, that put into question about what standing within the international arena US has. Would there be a possibility that the traditional allies of US, which is the EU nations, starts to be switched, starts to realize that US is no longer a good partner, and starts to switch over to the another side of the camp, which is the global south, and that causes the US dollar to lose its potential traditional safe haven in terms of what I call risk-off environment in general in the global stock industry. So right now, the US dollar doesn't behave like a safe haven. Instead, the safe haven play now centered on the precious metal, silver and gold, which gold and silver inches to what I call fresh all-time high in today's Asia session, also due to the risk of this debasement risk in the US dollar, which I mentioned earlier. All right, and one more particular news event or slash economic data that was released in early Asia session today was the key tier 1 China data. So the housing price index in China continues to decline over here. So it went down lower to negative 2.7% from negative 2.4% year on year in November. So it continues to inch lower, igniting the risk of this deflationary risk spiral. Especially we start to see retail sales for December came in below expectation. What market is expecting a 1.2% year on year increase, but it came in only 0.9% year on year increase, and that was also below the previous November print of 1.3% year on year. Some bright spots continues to be the manufacturing activities in China, where industrial production continues to rise 5.2% year on year from what market expectation of 5%, and also above 4.8% that was printed in November. GDP growth rate came in at 4.5%, slightly below 4.8% in the previous Q3 quarter, but on an annualized basis, it managed to grow around 5% according to officials' figure, which was enough to meet the government official figure of 5% if you stretch it out from a annualized one whole year of data. So net overall, I would say that it's still a mixed picture for the Chinese economy. The consumer side of the story continues to be lackluster. dragged down by the housing price index that is still showing no clear signs of turnaround. But however, the manufacturing activities in China continues to hold up very firmly, and that's allowed the GDP growth target for Q4 to be at a firm level of 4.5%, and that allow it China annualized rate for the entire of the 2025 to hit the government target of around 5%. But overall, later I'll share with you that the broader picture that is impacting the global stock market right now is still centered on this potential upheaval, where upheaval caused by Trump, where he may start to renew his trade tariffs, we call it narrative again, just to pressure EU and NATO members to give in to him and to allow US to strategically take over Greenland, and that could potentially play out in the near term and create much more higher volatility in the risk assets like the stock market that may face short-term downside pressure. All right, so with that covers the first segment of the daily dose, which I'm about to highlight the key events and relevant news flow that is unfolding in the global markets right now. So let us now focus on our second segment, which is the intraday technical outlook. All right, so let me expand my screen. All right, so let's start with the FX market first, right, with the euro dollar. All right, still recall that euro dollar on Friday we flipped to a neutrality stance. So indeed, price action continues to hover within the neutrality stance from last Friday session and into early Asia session. So there was a bounce in today's early Asia opening session, but this bounce can't surpass above the upper neutrality limit, which is at 116.40, before trading down lower since 9 a.m. Singapore time as we are speaking right now. So continues to remain in a neutrality stance for today on the euro dollar, given that there is no strong clearance above 116.40. But however, we see a minor bullish reversal right exactly at our lower limit that we highlighted last Friday of the neutrality zone, which is also confluence with the key 200-day moving average at 115.90/115.78. So 115.78, okay, let me expand this. 115.78 is the intraday low in today's Asia session, right exactly at the 6 a.m. mark Singapore time. So continue to watch this neutrality zone between 115.90/115.78, followed by 116.40. So only a bullish breakout above 116.40 and hourly close above it will potentially validate a intraday bullish bias on the euro dollar for it to retest the next intermediate resistance zone at 116.78/117 figure level, which is very important level. Why? Because that constitutes with the 200-day moving average, where price action has been trading down since 6th of January, and also the minor descending trend line that kept previous minor rally in check since the 24th of December minor swing high. So a clearance above 117 figure level will potentially lead to a much more renewed euro strength coming back into the picture. Right, so that's for the euro dollar. Next up will be the sterling pound over here against the dollar. So sterling pound also trade within the neutrality zone that we highlighted on Friday. In today's Asia session, it can't clear above 134.20 despite a very strong bounce that was seen at the 7 a.m. mark Singapore time. So continues to remain in a neutrality stance between these two boundaries. The lower limit will be at 133.50 followed by 134.20. So only a clearance above 134.20 and an hourly close above it will potentially seek out a continuation of the rebound towards the 20-day moving average, which confluencing with the minor swing high area of 14th of January last Wednesday at 31.34.57. Okay, let me put it in writing. 1.3457. Okay, a clearance above 134.13457, followed by 134.90, which is the minor swing high area of 13th of January, will potentially seek out much more renewed short-term sterling pound strength against the dollar to seek out the retest of this year high so far, which is at the 6th of January 2026 swing high area of 135.50, 135.50, 135.80, and that also confluence with the upper limit of this light green turquoise colored ascending channel, medium-term ascending channel from the low of 5th of November, right? So that's for the sterling pound. Watching closely the upper limit of the neutrality zone at 134.20. All right. Next up, we will touch on the Asia Pacific currency, starting with the Aussie dollar. So given that the Aussie dollar is rather a risk proxy of this risk-on environment for global stock indices, so with that, that could allow, it's still holding above the support level at 66.70, 66.60 pivotal support zone that we highlighted last week. So given the narrative that we may see some form of near-term weakness in the global stock indices, it may not be able to surpass above 67.20 in the very near term for today on the intraday basis. So with that, I will have a neutrality stance for today on the Aussie dollar, that means the Aussie against the US dollar. So neutral between 67.20 and the lower limit for sure will be the short-term pivotal support level that we have last week. Will be at 66.70, pardon me, and 66.60. All right, over here, let me change it into a different color. Okay, so neutral between 67.20, 66.70/66.60 on the Aussie dollar due to the current near-term potential risk-off situation that we are witnessing right now in the global stock indices. Okay, let me expand my screen so that you guys see. Okay, so this is the Aussie dollar. Next up will be the dollar yen over here. So the dollar yen plummeted down as expected below our pivotal short-term support, pivotal resistance zone, pardon me, below the short-term pivotal resistance zone that we highlighted on last Friday, 159.45/159.75. So with that, we will continue to maintain that near-term bearish outlook on the dollar yen. Today's Asia session, it hit our first support level at 157.50 before staging a bounce. So the bounce of the support level in line with the bounce on the hourly RSI, but the hourly RSI didn't flash out a bullish divergence. So with that, two key resistance level to watch to kind of fit the strength in the Asia session today, with intermediate resistance level at 158.15, which was last Friday downside trigger level. Pivotal resistance, I will tighten it to last Thursday high, which is at 158.85. So as long as any bounce didn't surpass above 158.85 maximum ultimum, we will still maintain that near-term bearish bias on the dollar yen. Below 157.50 exposes 157 figure level. A breakdown below 157 figure level will see this minor corrective pullback unfolding within a very complex medium-term sideways range configuration in first step to expose the next intermediate support level at 156.12, which confluence with the 6th of January minor swing low and the 50-day moving average. Only a bullish breakout and hourly close above 158.85 will negate the bearish bias to see a retest towards 159.45/159.75, which is into the lower limit of that intervention zone that was taken place previously in the past, where the Ministry of Finance instruct the Bank of Japan to intervene directly in the FX market in buying up the yen and selling off the dollar at this lower limit of the intervention zone of 159.45/75. The upper limit will be at the 161 figure level. Right, so that's for the dollar yen, still maintaining that bearish bias with a tightened short-term pivotal resistance for today at 158.85. All right, so next up will be the intraday outlook on the global stock indices. Let me expand my screen, starting with the Hong Kong 33. Right, sorry, let me do it again. Okay, starting with the Hong Kong 33 representing the Hang Seng Index. So the Hong Kong 33 broke down below our pivotal support level today. So what we could see over here is moving in line with the sell-off that we witness right now in the E-mini futures on the S&P 500 and the Nasdaq 100 futures as they are trading over in the Globex exchange. So technically still remains weak. So right now it's actually evolving into a minor corrective decline after showing 3 consecutive retest on 27,175, and now potentially it may seek the retest towards the 20-day moving average and the 50-day moving average, which is also the former close to the former pullback line of this minor double bottom bullish breakout now turns into a pullback support level. So with that, any bounces over here below, as long as it surpass below last Friday European session high, which is at 26,870. So 26,870 will be my short-term pivotal resistance level. We will flip to an intraday bearish bias for today for this potential minor mean reversion decline to play out, or mean reversion decline to retest the 20-day and the 50-day moving average over here again before another new potential renewed bullish impulsive upmove sequence take hold. All right, so watching these three support level very closely: 26,330, 26,200, maximum 26,045. So once you hit around 26,330 / 26,200, I'll be on the lookout for any signs of a bullish reversal candlestick to revert my situation back to the bullish bias stance again, given that it's still trading above the 20 and the 50-day moving average for the Hong Kong 33. Only a sudden bullish reversal above 26,870 for today intraday session that would invalidate the intraday bearish bias view and see the resurgence of the bulls to retest 27,175 in first step. Only a breakout above 27,175 would increase the odds for it to trade upwards towards the upper limit of this minor ascending channel that is still in place since 16th of December low to hit the major resistance at 27,500 next. So that's for the Hong Kong 33. Next up will be the Japan 225 representing the Nikkei 225. So the Japan 225 also broke down below our Titan short-term pivotal support level that we have previously on Friday at around the 53,440 level. So with that price action on the Japan 225, we're also now doing this minor corrective decline sequence unfolding, or a minor mean reversion decline unfolding towards the lower limit of this minor ascending channel support that is in place since 18th of December, and also maximum the rising 20-day moving average that is coming very close to 52,060 next. So with that, I will flip to a bearish bias stance in the near term / intraday basis using 53,790 as my short-term pivotal resistance level. First intermediate support zone to watch 52,830 / 52,644. Maximum level for today on a bearish bias stance. The next near-term support level at 52,060. Bear in mind that the longer-term picture still remains constructively bullish for the Japan 225, given that it's still trading above the 20 and the 50-day moving average. However, if the price action don't push down as intended, and from here it suddenly do a bullish reversal and break above 53,790 with an hourly close above it, then the owners now switch back to the bulls to see a retest towards 54,575, 54,910, 55,050 will be in the next scope next on the Japan 225. Next up, the Germany 30 representing the German DAX. So during today's Asia session, the Germany 30 CFD index so broke down below our short-term pivotal support level that we have on last Friday at 25,260 due to its direct impact on Trump tariff trade over the situation in Greenland. So with this gap down over here that is taking shape in the Germany 30, so the Germany 30 also facing this renewed risk of this minor corrective decline sequence unfolding back towards the 20-day moving average, and as well as the medium-term trend line support level that I drew from the low of 21st of November. So using 25,260, which is the gap down, the gap down as a gap resistance, that will be my my short-term pivotal support level, and also the swing low area during the start of last Friday US session that was taken down decisively as we are speaking right now based on its CFD price action. 25,260 short-term pivotal resistance level on the Germany 30 representing the German DAX. Flip to a intraday bearish bias support, intermediate supports level to watch 24,860 followed by the 24,760, 24,670, and also similar to other indices like I mentioned on the Hong Kong 33 and the Japan 225, the medium-term outlook still remains constructively bullish on the German 30. So if it starts to float down towards 24,760, 24,670, which is confluencing with the medium-term ascending trend line and the rising 20-day moving average, I'll be on the lookout for bullish reversal candlestick to flip my honors back to the bullish side of the story again. However, if price action don't go down as intended, and from here it starts to do a sudden push up and a bullish reversal and hourly close above 25,260, then that would invalidate today's bearish buyer stance and see the situation coming back in order for the bulls to have some control again, to retest 25,505 in first step, a breakout above it, seek out the next intermediate resistance level, which is defined by Fibo extensions cluster 25,800 next. So that's for the Germany 30. Next up will be the major US stock indices, the US Wall Street 30. So bear in mind that today, the US Wall Street 30, the cash US stock market will be closed for today due to a public holiday in the US. So the US Wall Street 30 last Friday, we have a new we have a bullish bias using this 20-day moving average as my short-term pivotal support area, which is in exact levels is 48,870, 48,770. So given the weakness that is being played out right now, I will not have any high conviction for it to bounce back to retest 49,606 again. So that was a retest that was seen on last Friday at the start of the US session before it traded sideways. And in today's Asia session, the Wall Street 30 CFD index just plummeted downwards due to that Trump tariff trade that could continue to play out in the near term for this week. So with that, lack of bullish conviction to maintain that bullish bias despite it didn't break below our key short-term pivotal support for today. So on the intraday basis for today, and also given the closure of the US stock market, cash stock market, there could be a lack of liquidity in the US stock market. So therefore, I will flip to a neutrality stance for today on the US Wall Street 30 CFD index. So neutral between 48,870, 48,770, with the upper limit coming in at 49,350 next. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 broke down below our 20-day moving average, which is our short-term pivotal support that we have on last Friday, 6,890. So right now, potentially it could seek out a retest towards the 50-day moving average, which is now coming in as a support level or confluencing at a support level at 68.34, 68.22, which is the minor swing low of 2nd of January. And the former minor swing high of 18th of December now turns into a near-term pullback support level. And if you will do the Fibo retracement of that previous impulsive up move from the low of 18th of December all the way up to last Tuesday intraday all-time high, that also confluence with the golden ratio of 61.8%. So with that, I will flip to a bearish bias stance at the moment, given that the SPX is still trading on the E-mini futures right now during the Asia session and during the European session. So two resistance level to watch will be this gap down, the lower limit of the gap at 6,910. Upper limit maximum will be the 6,945, which is also the pullback resistance of that former medium-term ascending channel support now turns into a pullback resistance at 6,945. So using 6,945 as my short-term pivotal resistance level, we will have a minor bearish bias stance for this minor corrective decline sequence to extend further towards the downside. Potentially, the next intermediate support level to watch will be 6,834, 6,822 next over here. Right, only a bullish push up above 6,945 will invalidate today's bearish bias to see a retest towards the psychological level at the current intraday all-time high at 7,000/7,005 that was previously printed out on last Tuesday. So that's for the SPX. Lastly will be the Nasdaq 100. So Nasdaq 100 also broke down below the 20-day moving average and also broke down below the last week low, which was last Thursday low, and definitely broke down below our pivotal support level as well. So with that, I will, and also this medium-term ascending channel support that previously drawn from the low of 21st of November has been decisively taken down today, and this will be my key short-term resistance level to watch, and so confluence with the 20-day moving average. So as long as NIM bounce didn't surpass back above 25,550 for today, I will flip to a bearish buyer stance, very similar on the S&P 500, for it to do a further push down to retest the 2nd of January 2026 low at 25,133. A breakdown below 25,133 may expose 24,870 next. Only a bullish breakout above 25,550 will negate today's bearish bias to see it floating up to retest the stubborn, stiff resistance that has been in place since 8th of December at 25,760, 25,830. All right, so that's for the Nasdaq 100, flipping to a bearish bias stance as well for today. All right, so that sum up the intraday technical outlook on all the global stock indices, where we start to see near-term weakness. So with that, let me move on to the commodities market, starting with gold XAU/USD that has been benefiting from this uproar in the return of Trump tariff threat on the EU. So with that, gold managed to pierce up, hit our resistance level, 24,645 and 26,084. No, 46, 45, 46.84, 46.87, which is 4,684, 4,687. That was kind of highlighted last Friday. All right, so with that, very clearly, gold continues to remain in a very strong bullish state of momentum, given that the hourly RSI has clearly taken up from a former descending trendline resistance, now turns into a pullback support. The hourly RSI has even yet hit the overbought level, indicating upside momentum in the near term still remains intact. So with that, I will actually have a tightened short-term pivotal support level for today, which is the gap up support level at 5,595. Okay, so let me do some modification on the key near-term support level for key pivotal support level for today to maintain this direct potential push up on gold XAU/USD. So 45,945. Okay, let me put it over here. Oh, come on. Sorry about that. 45,095, 45.95, 45.95. Okay, so this one will be my 4,045.95 ST pivot. Okay, so I will tighten my short-term pivotal support today to the gap up 45.95 in today's Asia session to continue this direct push-up scenario potentially above 46.87, potentially expose the next two near-term resistance level to watch, 47.20, 47.74, 47.780, which is a Fibo extension cluster level. Only a bearish breakdown below 45.95 and an hourly close below it will see a minor corrective pullback, retesting the former all-time high, now turns into a very key short-term support level as well. Watch where it managed to survive last Friday's sell-off and stage a bounce before the close of the US session on last Friday, which is at this zone of 45.50, 45.60. Only a breakdown below 45.60 will open up the scope for another round of minor mean reversion / corrective pullback scenario unfolding towards 45.12, 44.76, which is the 20-day moving average. So any potentially pullback below 45.60 towards 45.12, 44.76, I'll be on the lookout for another round of bullish impulsive upmove sequence unfolding back into gold XAU/USD again, given that the medium-term uptrend still remains bullish constructively. Right, so that's for gold XAU/USD. Let me save the chart. Lastly will be the West Texas crude oil over here. So West Texas crude oil reacted accordingly as we highlighted that it still continues to be in a much more sideways configuration, and last week push up is more of a corrective rebound rather than the start of a significant recovery. So given the fact that the West Texas crude oil, bearing in mind that we are now still continues to see some form of downside pressure as the global as the tension between US and Iran has starts to die off. So key levels to watch still remains the same, 61.17/61.35. That will be West Texas crude oil over here. So bear in mind that we are still looking for a short-term intraday bearish bias for it to play out for West Texas oil. So first resistance level towards 60-figure level, given that it can't broke down below 58.76. So I don't want to tighten my pivotal resistance to be so tight to 61.35. So bear in mind that we will still have that bearish bias in place unless we have a breakdown below 58.76. Then I will tighten my pivotal resistance to 60-figure. A breakdown below 58.76 will expose the next near-term resistance level at 57.74 before the oil. After that will be the all-important minor range bottom of 7th of January at 55.75. Only a bullish breakout above 61.35 and the hourly close above it will negate today's bearish bias to see a squeeze up to retest the 200-day key moving average, confluencing with the next intermediate resistance zone at 62.45/63-figure level. So that sum up the intraday technical outlook on West Texas oil and as well as all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So in today, rather quiet during the European session. So the only thing to look out for will be the news flow coming up from EU officers and again US officials later on due to this ongoing dispute over Greenland where Trump threatens with tariffs renewal duties on EU nation again. So that will potentially watch out for any news flow that could happen when the start of the London session opens today. Then other than that, in terms of key economic data, the core inflation rate for Eurozone up at 6 p.m. Singapore time. So that will be the finalized rate for December. So that shouldn't be a big surprise. Previously, the preliminary figure is at 2.3% year-on-year. So that shouldn't be a major surprise given that the preliminary figure has been released. Then closer to the start of the US session at 9:30 p.m. Singapore time, we have a Canada inflation rate, core inflation rate. So that will be of a concern for dollar CAD and the CAD crosses. Then, like I mentioned, today will be the closure of the US stock market, cash market. So there will be no key US data release during the US session. But bear in mind that Trump may start to tweet on his social media regarding about the situation between EU and US over the control of Greenland. So something to look out for as well. So then thereafter, at the start of tomorrow, early Asia session, we have 9:15 a.m. Key interest rate coming out from China, which is the loan prime rate 1 year and the 5-year loan prime rate. Given that we start to see weakness on the housing price index today and retail sales, potentially there could be a risk of a surprise move by PBOC, which is the Bank of China, to reduce interest rate from these two key benchmark interest rate, even though market participants are expecting no change at 3% for the one-year loan prime rate and 3.5% for the 5-year loan prime rate. So that will be out at 9:15 a.m. Singapore time tomorrow before the start of our daily dose at 11 a.m. So with that, let's sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.